Good morning, everyone. Happy Wednesday. I feel like it's a Thursday today, but it's Wednesday. Happy Wednesday. Hope everyone's having a good morning so far. We're just giving everyone a few minutes to hop on in. All right, thanks everyone's getting back in. All right, well, welcome everyone to Best Homes Wednesday workshop, where every Wednesday we have a workshop on Zoom. Once a month we have a free CE class here in the office. And today it's all about Mortgage 101 with our in-house mortgage company, Best Rate Home Loans, with Tamara Perez and Ms. Chantel. So without further ado, I'll let them introduce themselves and get the party started.
Okay, now you can hear me?
Yep.
Perfect. Okay, well, my name is Tamara, and I am a loan originator here with Best Rate Home Loans. I've been here about a year now, and I have originated a couple loans every month on a monthly basis, doing a wide range from conventional FHA to I-10 as well. We have range of products. So we are here to give you guys a little bit of what we do and the type of products we're going to be offering. And then Chantel.
Hello, everyone.
I
have been with Best Rate Home. Best Rate Home Loans for about 3 months now. I'm loving this company and everyone that I work with here. I've been in the mortgage industry for 2 years, and yeah, I'm excited to go on and talk about loans. Okay, so let's get started here. I'm going to share my screen. Okay. Can everyone see that? Okay, perfect. So
yeah.
There's our phone numbers. Our email is not in there, but we can send that in the comments and put our emails in there. And here we go. Today we're going to go over, here's the agenda. We're going to go over FHA loans, conventional loans, I-10 loans, and VA loans. And of course, any questions at any time, raise your hand, let us know. Happy to answer any of them along the way. All right, Tamara's going to do FHA.
Perfect. Okay, so FHA, it is a federal housing loan. Now, right now, obviously, it hasn't been as common to use FHA, but I feel that the market's changing and I feel more FHAs coming in. I've recently had 2 offers be accepted with FHA. I released a couple other FHA pre-quals out, and they are being accepted at the moment. So a little things that we can keep in mind for FHA, it could be used multiple times, meaning you can actually, majority of the people that obtain FHA, they actually, sell their home or they refinance to a conventional to remove that mortgage insurance. Now, which means that you can actually go back and still use FHA again and have, but there's only one FHA loan allowed, okay? Now, for FHA, we actually can go as low as 500, but with a 500 FICO score, there is a minimum requirement of 10% down. Right here, we did say 580 because with 500 FICO score, there is a lot of more contributing factors to get that file approved. Now, 580, it's still a little bit tricky to get it approved. We still need more contributing factors. We actually do need a larger down payment versus a 3.5 that is required for FHA. Now, on that end, manufactured homes for FHA, you are required to have a 640. So keep that in mind when you have borrowers out looking. Manufactured homes across the board, not just plain and overlay for us, but this is actually a FHA guideline. 640 for manufactured homes, okay? Now for condos, they do need to be approved through FHA. Now, sometimes you can actually get a condo approved. You actually have to go through the lender that can actually get your application submitted and get it approved FHA. Now, they might cost a little bit of a delay getting your actual condo approved through FHA, but there is a packet that you can actually do that. Now with FHA, condos are same guidelines occurred. There's not more of a down payment required. It's still the 3.5 down. So that is a minimum for FHA, 3.5% down, unless you have a 500 FICO score, you are required to come in with 10%. Now, have more of a purchase power, meaning the back end, the DTI can go up to 57% versus conventional. Conventional is more conservative and it's 45, which means that if the borrower has a little bit more debt or has less income, then the purchase power can be increased a lot more. It can actually be increased about $30,000 to $40,000 more. So FHA borrowers can qualify for a lot more versus conventional because of the back end. Now there is mortgage insurance. The mortgage insurance is for the life of the loan. A couple of years ago, you had to, I believe, have like a certain amount of equity and it would fall off. That changed. So in order for you to get mortgage insurance removed, you would actually have to convert your loan to a conventional, which would be rate and term refinance, or if you wanted to cash out, you can also do a cash out refinance with also removing your mortgage insurance. So one thing that with FHA, they do not allow it to be used for investments or second homes. It has to be a primary residence, has to be used as a primary property. But after a year of having that home, you can actually convert it and use it as an investment. You can actually rent it out, even though there is still an FHA loan on it, but it has to be within after the year of having that actual property. And one thing a lot of people don't know is that you can, FHA does require, allow multiple units. I believe it's 2 to 3 units. And you can actually live in one of the units and rent out the other unit or other 2 units and use that portion of that rental income towards your loan. By doing that, you do need to have kind of like a rental history showing that you've, managed rental properties. So that's something to keep in mind. Or you would need to use a third-party company to actually manage the other 2 units or the other unit for rental purposes, okay? Now, the loan limit here in Maricopa County has increased and it's at $441,600, okay? And it's been increasing like every 6 months or so. So hopefully we do get a little bit more of an increase turning into the second part of the year. Let me know if you guys have any questions right now. Like I mentioned, I feel because of the amount of loan applications that have been submitted this year, it's at a low count, which means that, there's going to be a little bit of a switch with buyers wanting to apply. So I feel like there's going to be more FHA. It's going to be coming stronger. And the fact is FHA has lower rates right now. And I'm going to, there's going to be one more slide at the end where I'll show you an example of what FHA rate is today. And FHA is for our conventional rate and mortgage payment. Now, let me see. You want to student loans and bankruptcy with it? Okay, perfect. So I'll talk about student loans and bankruptcy. So for student loans, if you have a payment arranged already set up, a payment plan, then we'll go ahead and use that payment amount. If not, we actually have to use a percentage and we go ahead and add it automatically. Because right now, a lot of the student loans are in the deferred program. There isn't an actual payment set up for anyone. And I believe it was extended up until next month and they'll start occurring again. But these extensions have prolonged already. I think it's going on the 3rd extension right now. So we don't know, but we have to still take into consideration it is going to be a future debt with the student loan. So we do have to take a percentage in. And 30,000 student loan. Okay, so that would be like a monthly payment. Now we can also have the borrowers go in and contact the student loan department, get a payment rate, a more of a lower amount of monthly payment, because if you see here, $150 a month, it is going to kind of lower our purchasing power because of the DTI. The $150 is going to be good, so pretty high. So we're going to want to have that a little bit lower. So keep in mind, there isn't a payment set up. I really strongly recommend the buyer to go ahead and get that going, because they can set it up to a $25 monthly payment, because it all depends on how much they're getting paid, if they're out of the program, if they're going to continue education. So that kind of deferred program is going to prolong, and it'll change. But, if maybe they've graduated, they became a nurse, a doctor, then, with the qualifying income they're going to be receiving, then $150 is okay. But if they're, to have a smaller education or still prolonging that education, then it's better for them to lower the monthly payment on that end. Going to bankruptcies, Chapter 7, we do have a waiting period of 2 years, okay, for Chapter 7. Chapter 13, it is 12 months upon the discharge date. So the way we can find out the discharge date, you'll have your bankruptcy documents. It's not from the date that you start your bankruptcy, it's actually the date from it when it ends. So it's the actual discharge date. So 12 months from discharge, 2 years from Chapter 7 for the 2 years from that point of discharge. Okay.
All right, everyone. Does anybody have any questions with the FHA loans at all? Anything we didn't touch on? No. All right, so I will go into conventional loans. So conventional loans are definitely the most popular for sellers. That being so because of the appraisals and the inspections are not as strict as FHA or VA loans. They are a little harder to qualify for the buyers. So conventional loans are not backed by the government agencies. Minimum FICO score is 620. And minimum down payment is 3% for first-time home buyers, so a little less than FHA, and then 5% again for if it's your second, or if you've owned a home in the last 3 years. So some people do ask about the first-time home buyer. When exactly do they become a first-time home buyer again? After, if they've not owned a home for 3 years, you are now a first-time home buyer again. So you can use that 3% or 3.5% for FHA. DTI, so debt to income ratio is 50%. That's sometimes why FHA can be a little easier for the buyers because their DTI is higher. Nice thing with conventionals is your PMI is removed once you've reached 20% equity. So if you put down that less than 20%, you will have PMI. We do have different ways to, to get PMI bought into the rate so that it's not on a monthly payment schedule. And that does help bringing down their monthly payment as well, because that PMI, is not added on to the monthly payment. So we are able, with some programs we have, to put the PMI paid upfront basically and into the rate of the loan, so they won't have it monthly. Loan limits for Maricopa County, single family home is $647,200, and then duplexes are $702,000. So the loan limits do vary per county. I just chose the one that we're in currently, but if you guys have any questions about, your loan limits in your area and anything like that, please let us know. But yeah, conventional is pretty straightforward. And is the most popular for sellers because of the appraisal and home inspections. Do you guys have any questions with conventionals? Did I miss anything, Tamara?
I wanted to just add in the down payment requirements. So we have as low as a 3% conventional. So I know if you guys kind of are aware, there isn't down payment assistance programs at the moment because of the hike in rates, but there is still they're still offering the 3% home ready program for conventional. The home ready program loan, there's a loan limit for that. There is a income limit for that. So with home ready, there is a really handy dandy calculator on the internet where you can actually put in the address and it tells you like the area median, which is the income limit for that particular property. So it's not really the area, it's actually for the actual property. So it's as low as 3%. Right now, I believe you can't make more than 62,000 for that particular program for conventional. Then there's a
All right. So chapter, just a little bankruptcy for conventional. Chapter 7, it's the most common type of bankruptcy. The court wipes away most of your debt, so you're not having to pay it back. Waiting time is 4 years from the discharge date. Chapter 7, oh my gosh, chapter 13 is less serious. They're not wanting to pay off certain items and yeah, so that one it's for conventional.
Oh, they kicked us. I got kicked out of the Zoom.
Can you guys still see my screen?
Yeah, we can still see you.
Okay, thanks. Making sure. Okay, let's see.
Hi, so I have a question.
Yeah.
So why would someone be moved for, let's say, from conventional to FHA or vice versa? Like what would be factors that would say, okay, maybe we should put you with this program versus the other type of loan?
Great question. So conventional, the rates are definitely higher if you don't have that like perfect credit score. If you and the DTI is lower, right? So say you've got a little more credit card debt, say you've got higher car payments, and your credit score is lower, then we wouldn't want to go with conventional because that rate could, you know, be super high and it could take away a lot of your buying power. So those are some factors. With FHA, we have a higher DTI, so we're able to give more buying power, so higher purchase out there. And then also the rates are lower with FHA, so that can help also with your buying power and being able to get more house for your money. Did I answer that? Did that answer
Yes,
your
thank you.
question?
Yes, thank you.
I think we keep the room safe.
Okay, yeah, of course, you're welcome.
Chantel, I had one question.
Okay, so yeah.
Chantel, I had one question. The PMI for FHA loans, can you revisit that again? I know, I mean, that's probably when people would ask me explain that, I would not be able to explain it well. So
Yeah.
it's just a matter, because that affects the mortgage payment a lot. So is there any way, can you just kind of revisit that again? And then I know in conventional, it's not on there, and in FHA it is. So for any new agents or anyone who has to explain the PMI, we have our lenders for it, but sometimes you come across where, you know, we have a gist of how we can answer it as real estate agents.
Yeah, definitely. So FHA, the biggest thing to remember is you will have it for the life of the loan. It doesn't matter if you refinance, you know, any of that 80% loan to value, it will not fall off. You will have it forever. So if you start with an FHA loan, because, you know, say your debt was high or your credit score wasn't that great at first, now you've got all this equity in your home, I would definitely recommend refinancing to a conventional so that mortgage insurance can fall off. And it can be pretty steep. It can be anywhere, you know, like $100 to $241 added onto your monthly payment. So it's definitely nice to be able to get that off. So yeah, FHA, if you do not put, no, I'm sorry, FHA, you'll have it no matter what. Even if you put 20% down, you'll still have the mortgage insurance. Now with conventional, you can put 20% down and you will not have the mortgage insurance. I'm sorry, PMI. So you will not have that if you put 20% down. But if you do put 5 or 3, it will fall off once you've gotten that 80% equity in your home. So that is a really nice thing with the mortgage insurance there. We're also able to roll it into the loan, roll into the rate. So there are different options, more flexible with conventional than with FHA, you know, for that. So we're able to not have that monthly payment showing, you know, that $200 a month for mortgage insurance. You take a slighter, higher interest rate, but now you're able to not have that extra $200 added onto your payment. Did that make sense? Did that answer most of it, or?
It does. Like, if anyone has any questions, Natalie, thanks for that great question, because there is a lot of lenders who are kind of suggesting for borrowers to go FHA because the interest rate's lower, but then the PMI is there. But then it's like, why do I want to pay that extra money towards that? It's like, well, it's better than the extra interest rate. So it kind of goes a lot back and forth. I think for anyone who isn't able fully to explain that to a potential borrower, I would definitely partner up with Tamara or Chantel offline to see if they can help with any additional questions. But yeah, thank you so much.
I wanted to add on to that as well. Because FHA has such a lower amount of down payment, it allows you to have more cushion to kind of pay, you know, that over, you know, the sales price. I'm giving you that more power to play with more money on that end, just because you have a lower amount. And given the fact is that for conventional, a lot of people are not going to qualify for that 3% because people because of the price range, you have to make more money. So to make more money, you have to qualify for more. That means that there's going to be a very limited amount of people that can qualify for the 3%. So guess what? Now you're doing the 5%. That 5%, you know, versus a 3.5 for FHA, you kind of have more purchase power to purchase or play with more money, you know, offer more over the, you know, sales price. So that's something to also take into consideration when you are doing FHA at the moment. But like I mentioned, lately I've only been doing FHA, and been doing about three to four a month on FHA.
Any other questions with conventional or FHA or PMI or anything like that? Okay. So let me. All right, so now we're going to touch on some VA loans. Thank you to everyone who has served. This is a picture of actually my husband 10 years ago and our little baby. So we have a VA home. I love VA loans. I definitely think all military who have served, this is, you know, an awesome thing to have, and they definitely deserve it for all that they have sacrificed. So VA, of course, is for military personnel, active duty or reservist only. Also surviving spouses of service members who unfortunately have died in the line of duty. So they are also able to use the VA loan. A big thing to know is if you want the spouse to be on the loan as well, so to count, you know, the spouse's income, they need to be married. If they are not married, it can be very tricky. I think there's like a larger down payment that they have to put. I'm not 100%. I will definitely find that out for sure. But yeah, they have to be married. It can't just be boyfriend and girlfriend or anything like that. They have to be married. Your certification of eligibility, that will determine how much you are able to buy as well as your income. But certification of eligibility is a very important item. So there's no like actual loan limit. If you have a high certification of eligibility and you're able to have your DTI in the ranges with your income, then there's no loan limit with that. Minimum credit score is 620. Nice thing with VAs is there's no down payment and no PMI. So it definitely helps to get into the home easier. You can have multiple VA loans if you have enough. So you can have 2 VA loans if you have enough entitlement left in your VA loan. A big thing with VA is there are that funding fee. So if they are 10% disability or more, that VA funding fee is X'd out. They don't have to pay that. So that's a nice thing with no VA funding fee. I did put breakdown up here what the VA funding fee would be. So if you are purchasing your no down payment at all, then your first time use would be 2.30% of the loan amount. And then if you have used it more than once, so you're, you sold your first home, you're now getting a second one, then it would be 3.6% of that. If you put down 5%, so of course they can always put down a down payment. So if they're using 5% or greater, then it would be 1.65% for their first time home, and then 1.565% if they are getting another home or using their VA loan again. And then 10% or greater of down payment is 1.40% for first and for their second. VA loans can be a little trickier with their appraisals, inspections. They also require a termite inspection, but honestly, it's the safety of the buyer to make sure the home is in good standings. The roof is good, the house is in great quality. So fixer-uppers can definitely be harder to get approved with VA loans. Yeah, any questions on VA loans?
One thing to add in for the VA, VA actually orders their own appraisals. So we don't have really much control of it, as in rushing the actual appraisals, but they do come in at a pretty quickly actually from the day of ordering.
Thank you for reminding me about that. All right. Now Tamara is going to talk about I-10 loans.
Okay, so an I-10 loan is an individual tax preparer identification number. So pretty much these identification numbers are issued to people with no socials here in the US. Now, you don't have to be from Mexico. You can be from anywhere nationwide. Okay, now for applying for the actual identification number, it's very simple. You just go to the IRS website and you download the W-7 form. And that's actually free for these individuals when applying for the I-10. So take that into consideration when you meet with people. I know that people coming from Haiti last year, they were issued automatically the I-10 number. So with that, there's a different program. It's a different lender. The lender that we use is First National Bank of America. It's what we consider a non-QM because they're not conforming with Fannie Mae or Freddie Mac, but it is technically a conventional loan. Now, when we issue a pre-qual, it is going to be conventional. The loan is actually underwritten through the actual particular lender's their own guidelines. So there's different ways to go about it. Within the I-10 program, there is a minimum down payment of 15%. Now, with the 15%, they do require these clients to have a minimum of 680. In all reality, a lot of the I-10 have perfect FICO scores. The majority of all my I-10 have 800 FICO scores, above 800. I never came across a borrower with the 800 and above. My clients are 815, 805. So that's something to keep in consideration. I-10 individuals have perfect FICO scores, okay? And they're the ones that actually have this down payment. They're the ones who save their money and put their money away because they are, very limited to the programs here in the US that they are able to apply for and purchase a house. A lot of people are familiar with the hard money and private investors. They are only what we call interest only payments. So there's nothing going to the principal. At the end of the loan term, there's going to be a balloon payment, or they're going to have to extend the loan. And there is usually a huge extension fee between $3,000 to $5,000 just to extend for one more year. A lot of these lenders are getting smart and doing a 30-year term, but again, it's only interest only payments. Now with the I-10, 15% down is something new. 2 years ago, it was 20, 25, 30% down for these individuals. Now 15% is something that we can work with. Keep in mind, there is also a program for them for no FICO score. A lot of individuals don't believe in credit. So everything was cash for them. They paid everything cash. There is a program for them as well. The interest rate is going to be a little bit higher, but it's still doable. I had one where an individual bought a property, hard money, and had no FICO score. We were able to refinance that hard money into a traditional loan. And he went from having a 18% interest only payment for a year versus a 8.5 interest rate traditional. You're paying interest, principal, taxes, and insurance. He was very happy with the whole outcome of his file. He's saving about $600 to $700 a month with that transition. Good thing about I-10 is that there's no mortgage insurance. So it's just very, very simple. Even if you are coming in with 15% down, there's no mortgage insurance included in this. It is a fixed rate. They do 15, 20 to 30-year loans on this. Now, if I'm not mistaken, manufactured and condos, they're actually 20-year loans. So they do, we kind of go, they do a little bit of everything, manufactured and condos and single family residence. Now, the 15% is actually only for single family resident homes. When it's a condo, it changes, and versus a manufactured home, the down payment increases. So I'm sorry I did not put that in there, but if you guys have any questions, like with I-10 lenders, borrowers, contact me and I'll give you more of the basics on it. And we do also allow the bank statement program and the P&L program. The P&L is actually simple. It's just a profit and loss document with 12 months of profit and loss. So this is great for all the I-10 self-employed, which a lot of the I-10 are self-employed. They're the ones with businesses. I came across yesterday with an I-10 individual. He has 3 businesses. Each are making about 1.5 million a year. He owns a drywall. He owns a ice cream shop, and he owns a construction company, each making great amount of money. And unfortunately, when he did not get offered these programs, he bought the home with a hard money lender. So keep in mind, small businesses, with I-10, they are making a good chunk of money, and we can roll them into this bank statement or P&L program. Okay, they do need to have a valid passport. Now, a passport from their country, not from the US, keep in mind. Or if they have any valid identifications from different countries, that's fine. It just has to be, cannot be expired, okay? And I know that I've had an individual where he didn't even know his passport expired. He actually went to the Mexican consulate. In about 5 days, he already had a new one updated. So that's something very, very fast to get. But a lot of individuals that believe before the the early 2000s, individuals with I-10, depending on what state you were at, actually gave you a driver's license. So I had one individual had a California driver's license, or another one from Oregon, I believe. So just depending, as long as they have a valid driver's license or an ID, because again, IDs do not expire. That's something that we can also use. And we can refinance out, all these individuals with hard money and private lenders into a traditional loan. Rates are a lot lower than hard money. And I feel that I-10 is something that we should really push, because these are the individuals with good chunk of down payment. They take care of their credit, and they're understand there's very limited products for being an I-10 individual. So it's kind of like they're not going to shop you around, or they're not going to go somewhere else, because the bank that we use is actually, there's only maybe a handful of people that do I-10, and they really don't close. I've had other lenders give me their I-10 loans for me to close them out because they are not unable to get that done. So I've been doing I-10 for a while, and I kind of feel that I've, perfected the I-10 program. And they're very basic guidelines. And I feel that, right now, given that the market we are in today, it's something that we should work on, because the rates are kind of already, they haven't changed at all. I believe since December to now, they probably went from a 7.125 to 7.3. That's the only leap that's happened within the last 6 months. People within individuals, today's market, it's hiked up a full 1.5 or almost 2 points at this point. So rates for the I-10 loans are not moving. They're staying at what they're at. And if I compare the I-10 to the social, people are actually, well, I'm not too off. This is actually a pretty good mortgage payment. They're happy with their mortgage payment. So that's something that I wanted to share with everyone. I-10 is something that we need to push and get going. So keep in mind, you don't need to be, it can be from anywhere around the world, an individual with an I-10 number. Okay, so then wanted to talk today about today's mortgage payment and give you guys an example of what we are with today's rates. So if you want to,
sorry, did anyone have any
jump over
questions
to
real
the
quick
next
about
slide.
I-10? Did anyone have any real quick questions about I-10 at all?
I had a quick question or comment, really. Overall, my husband is an independent contractor, 1099. Technically, he doesn't qualify to purchase a home. So I've always just been like the one on there, and then putting them on there, it's like, oh dear God, it's going to cause a headache because they're going to start asking for bank statements and all of this. Even as real estate agents, especially for those 10-year real estate agents who've been on 1099s for like ever while you've been in this industry, traditionally, you don't hear enough about this. So even agents who are, this is great advertising material. Tamara's been talking about I-10 forever. And sometimes I would feel like, is she saying like I and then the number 10, or I don't know what I-10 stands for? Or it's like, I'm going to ask her later because I don't want to ask a dumb question. I ask questions that anyone can think of. So it took me a hot minute to really embrace it. So thanks for explaining that, Tamara, because that was actually well explained. So this is a great clientele who they don't qualify. There's people who've never owned homes because they're small businesses, and nobody talks about this enough because who do they find this out from? It's, the big dogs aren't talking about it. Certain companies don't offer it. So of course, they're not going to say, well, you should do this. Hard money lenders are like sharks. So they're going to be like, you should go use me. And then it's a balloon payment. And it's so unfortunate that there's such a large group of individuals. And considering that they just need a valid passport from their country, this opens up the door for a lot of people. So I hope everyone took a lot of notes in this and connect with them. With the Tamara or Chantel in regards to this, because you can do videos on it, partner up with Tristan, or just do a quick little video, a TikTok, whatever kind of floats your boat in regards to those areas of advertisement. But thank you, Tamara, for bringing this to life within our brokerage and just in general with your social media, because it's a loan that's going to change a lot of people's lives who just don't traditionally qualify for a loan, and nobody helps them or is able to explain this enough or care enough to help them follow the process. So just kind of a random comment in regards to that, because this is, if this kind of just flew over your head like me when I first heard it, it's just like, that's okay, just revisit it, because I can assure you, you're going to come across people that have just looky-loos on the CRMs and home search sites, and then just say, I just, I get paid, I own a yard company, I clean, and I don't traditionally qualify for this, so I just rent, and they're forever renters. So it's very rewarding feeling when you finally get someone to be a homeowner that traditionally no one else was able to help you. In this case, you'll have a go-to lender to reach out to, so they can explain this to her. And Tamara's bilingual, so if you do need a lender who's bilingual and can explain this to your client, send them their way too. But thanks again.
Thank you. And just keep in mind, the 12 and 24-month bank statement program is not just plain for people with the I-10. The minimum requirement, and sorry, it's not on a slide, but these are individuals that file 1099, and of course, they're not leaving enough income. The income is very little. We go based off 2 years of self-employed income. And keep in mind, remember, we always need 2 years. With the bank statement program, we just need 12 months of bank statements. We average out the deposits in those bank accounts, and that's what we use for income. So keep that in mind. We just need 12 months. And obviously we need the work history, as long as you've been operating, have license to show that you've been in operations and been in business for that time period. We just need 12 months of income. Okay, so just keep that in mind. That's a great program. A lot of banks offer it, and we offer it as well. We actually close our loans, so that's something that we offset from everybody else. And I know that a lot of lenders offer the I-10. It's very little that actually close their I-10. So just keep that in mind. Okay, so moving forward, Chantel, do you want to move us over? Okay, rates. I named this the Mortgage Armageddon. Rates are insane. Yes, they are. So just to keep in mind, it is one of the highest rate hikes since the 80s. And I'm from 89, so I really don't know much about it, but I know the rates are just high right now. So you have any pre-quals out, I suggest you guys are keeping up with the lender and updating on a weekly basis. Before I was saying at least once a month. That's not the case. You have to update on a weekly basis. Rates are going up, and we don't have any control of it. Just know that when we, as a lender, give that cushion just in case the rates are going to go up. So the pre-qual I issued yesterday was I left that cushion. I could have maxed out and be like, here, you qualify for 450. I was reserved, issued the pre-qual for 415 just in case I needed that wiggle room to do that. Now you can obviously have the buyers have extra cushion to buy down the rate. I would suggest maybe having the buyer an additional $5,000 just in case you need to buy down the rate because of the rate hike. So I had another issue that way. A month ago, pre-qual was out, and I believe it was like at 3.5 or so, and now it's at a 4.75. The borrower didn't qualify once I received the contract, and so I had to tell them, sorry, we have to buy down the rate to at least 4.2. That was about a $4,000 cost for that rate, and it was doable. Thank God it was doable. But just keep in mind, instead of having this extra money to fight for the contract and pay more for the purchase price, have that money for the rate at this point. We are expected to have 2 more hikes this year, so we'll see. We might be at conventional almost to 7%. Today, I left you guys a little bit of an example of what today's mortgage payments look like on a FHA and conventional. So on your left-hand side, you're looking at something around, let me see. Yes, this is going to be conventional. We're putting down 5% on a home for $400,000, okay? The interest rate today for someone with a FICO score of 700, keep in mind, someone with a FICO score of 700, it is going to be at 6.125, okay? And that is what we include on a mortgage payment. That is the full mortgage payment with an average of, $100 of taxes, HOAs, an HOA fee, insurance, and the mortgage insurance on there. Now, the mortgage insurance is a little bit high on there. We kind of estimate a little bit higher. We work with UWM. UWM, the offset with them is that the mortgage insurance is a lot lower. So right here, this little calculator is a little bit higher, but it's still kind of where we stand right now with a traditional mortgage payment for $400,000 for a conventional. FHA, as you can see, the interest rate is a lot lower for someone with an this is actually a tier of 680 to 700. Okay, 680 to 700 for FHA, 400,000. As you can see, it's about $6,000 less on the down payment. It says 4%, but it's actually 3.5. This little calculator kind of just merged to 4%, but it's really 3.5%. And again, traditional matching the same amount, but with the lower interest rate, you are looking at a $2,400 mortgage payment versus a $2,689 for conventional. So that's something to keep in mind. These are today's rates for a 700 FICO score. So right now, it's really hard to get anything under $1,800 mortgage payment, unless $1,800 because you're coming in with a good chunk of down payment. And if you're coming in with the minimal, you're going to be above $2,000 mortgage payment for the average home buyer in today's market. Okay.
Any questions about rates at all?
Tamara, I have a question. So on the investment side, how much we're talking about? What's the interest and what's the condition for credit score and so on?
So I actually did receive a contract today for an investor. Now the home is for $356,000. They are putting in $150,000. Okay, so they're financing half. For them, the interest rate is going to be at like 5%. And I haven't actually done that, but rates are completely high for investments. But again, the contributing factor, if you're going to be doing a good chunk, more than 20%, then the rate is lower. But if you're just committing the 20% or 15% for investment properties, the rate is going to be higher. So I'm assuming it's going to probably be like a 6.5. They were coming in with the 15 or 20%. And obviously 15%, the rate is a lot higher for them. But as of last month on the 15th, the Fed kind of spiked up the rates for second home and investment property owners. the individual that I'm working with today is putting in more than 20% down on the property. And so it's really beneficial on her end, just because her mortgage payment is going to be a lot lower and the interest rate is going to be a lot lower for this particular individual. But for investors and second home owners, it's going to be very tricky. The rate is going to be 6.5 to 7% for them. And
that
right now,
5%.
because of that, our rate sheet doesn't go that high. So it's probably going to be at a charge. So they'll probably be like at 5.5 or no, I'm sorry. It's actually, let's say at 6.5, and it's going to be at a cost versus it for them to kind of sorry. The rate sheet goes from up. It's kind of backwards to explain it, but it's actually, it's going to be at a charge, and they cap us out on the rates. So, we can increase it because they were like, oh, we'll just move it up until we're at par and we don't have to pay for that rate. That's not the case. They give us the lowest to the highest, and at the highest they cap us down. They tell us, okay, it's going to be at a charge, and this is the highest we can give them, and this is going to be the cost for that rate on conventional. So it's been very tricky, very, very tricky to release any pre-quals for conventional loans. And on this exception for this individual, just because of the huge amount of down payment they're putting down, it works. But if your individual just wanting to meet the minimum 20%, it's just going to be very costly for the rate at that point.
I was gonna say, have you seen, I'm sorry. Have you seen a rate
go ahead.
without points that had to be bought down now since they've done that? Because I haven't been able to get a rate yet that didn't cost, even if it was the par rate, there was still points added for investment properties. And it was a pretty good chunk. So it's, 6,000 could be more, but so do keep that in mind with anyone that's looking to do investment properties.
Yeah, that's right. The rate, the one I just quoted this morning, it's still charging for that rate, even though it's like at 5%. It's a smaller percentage. I believe it was like 600. It's still charging. There's still, and then, let's say 4.99 is probably 1,200. So there's always a cost right now to each rate at the moment for investment properties.
So for the one in our house, what's the minimum? 10, 15, 20% down for investment?
Go ahead.
No, it's like for our in-house mortgage. What's the minimum down payment for investment? 10, 15, 20, 25?
Minimum is 15% for investment properties.
Got it. Thank you.
And at 15%, you will have mortgage insurance.
Gotcha. Thanks.
What are the rates right now?
If you see the slide down below, it's conventional with a 700 FICO score coming in with 5%. Conventional, you're at 6.125. FHA with a 680 to 700 FICO score coming in with the 3.5 down, you are at 4.75. And I believe at the 4.75, there was a small hit to the rate. There was probably like a hit, maybe $200 to $300 charge to that rate.
And what I meant is ARM rates. What are the ARM rates right now? 5-year ARMs or 7-year ARMs?
I did not quote any ARM loans today. I believe when was it? I believe it was on Monday when we quoted. It was at 4% for the 5 and 1. But it was a hit to the rate at the 4%. So I know they're saying that they're coming in with more of the ARM loans, but we're still seeing the rates being compared. They're still the same for the ARM loans at the moment.
Any word on the 40-year loans?
I hear it everywhere else. I have not came across. I know that one of the lenders that we have in-house mentioned a 40-year loan, interest only. So it'll be a short-term loan that's beneficial for an individual for 40-year interest only. But at the moment, I haven't came across an actual product for 40-year loans that we might have internally at the moment. Which will be beneficial if we do get that product for the 40-year loan.
Okay, thank you.
Just a little, I think that's all of our slides, right? Okay, yeah. So just a little about us too. We do a lot of loans with UWM. We are able to close very quickly with them. Their appraisal turnaround is days. It just takes a couple of days to order and get it back. I think the longest I've had one is a week, but we're able to close very quickly with them. We do have offering to the end of the month free appraisal with UWM as well. Anything else extra you wanted to add with that, Tamara?
Yeah, United Wholesale Mortgage. They are the kings of the broker world. They are amazing. Their turnaround times are amazing. Can clearly get a file closed out in 15, 20 days. We are closing early on all the files with UWM. Their turnaround times are amazing. You can have a file disclosed and approved within the 72 hours of getting the contract in. So that's something to look forward to when we kind of know ahead of time what to expect on the file. We will foresee any problems within the first 72 hours of getting a contract. So that's something that we kind of like, just because sometimes, a traditional mortgage company can take 15 days to get the file into underwriting, and we kind of get the file immediately into underwriting, get all the information, and then we get conditioned for it. So that's something to take into consideration when working with a mortgage broker.
Just to follow up, by the way, gals, you did a really, really good job. So good work. Appreciate you both. So if, let's say, for example, I got a buyer lead, or I'm working with a buyer and they have questions about the rates, have questions about the products, the timelines and all of that. Can the agent directly call you and get you in a three-way so you guys can have that conversation with the borrower?
Yes, that's definitely the best way to do it. Just add us on, do a three-way. We're able to answer, if you've got any questions as the real estate agent as well with the buyer, it makes sure that we're able to connect right then, instead of, perfect, let me call my lender and they will call you and reach back out, by that little, even if it's 5 minutes, they get into something else, they take another phone call. So it can be kind of spread out till when we're able to retouch with them and they answer our phone call again. So definitely the quickest, easiest way is to, just say, hey, hold on real quick, let me attach my lender to this call and we'll answer all the questions, and put us on the three-way and, give us a call. Definitely. Thank you for bringing that up, Alan.
Amen.
And on my end, same way, if you want to, there's sometimes leads, like in the Hispanic market, individuals work 8 to 5 and don't get out till after hours, or not available till after hours. So I give my wiggle room of calling these leads from 4:30 to 6 or 7 o'clock at night. And, if you want to share your CRM, go ahead and add me on, so we kind of keep track of what we're doing with the client, where we're at with the client, touching base with the client. So from the point that I convert that lead to an application, and then from an application to a pre-qual, I would like to have, that done within the same week. And of course, if we need to work on the buyer and nurture the buyer and making sure that give them the information that they need so we can possibly purchase a property in the future. That's something that I want to make sure I hold their hand every step of the way. I like to, keep on working on my clients. I'll work with individuals for a year and make sure that they are ready to purchase within that year, if we give them a great, game plan, and for them to follow the actual game plan to purchase a property. Once we are under, have a pre-qual out, I like to be part of the offers, being added to the emails when the offer is being submitted. I like to kind of give a personalized recording, a video that I send out by text message or by email to the listing agent, so they fully are aware. I'll let them know, like, hey, even though the pre-qual was issued a week or 2 weeks ago, I'm letting you know today, this is where we stand. The borrowers, still in green, or we still have low ratios, or we have verified funds. I'll let them know an update from that point on. And that's something that I like to do with my offers being submitted. I like to be able to be part of it, or, extend out and reach out to the listing agents, letting them know, hey, can you keep us in mind for a backup offer if this offer falls through? So that's something that I like to offer to my agents as well.
Another thing to add with United Wholesale, we're able to add the realtor on both selling and buyer. So both agents on there, and then the buyer as well. Any updates, they get them right away too, emails, little videos. They're able to be, any changes on the file updated right away with UWM as well. So it's an awesome feature that they've added in. Both me and Tamara are open to do open houses with you guys. We are available on the weekends. Please let us know, when you've got one, and we'll bring some, food, some items, some water, and we are happy to do open houses with you all.
I have a question about the E10 loans.
Of course, what's your question?
So let's say two people wanted to go on a loan together, but one has an E10 and one has a social security card. Would that automatically disqualify them?
So it's fine. They can actually be on the loan, but we have to take in consideration it is I-10. So the requirement would still stand for an I-10. They can still be on the loan together and no benefit if we need more income, but it's not going to change it's not going to lower the down payment requirement. It's not going to lower the interest rate. It's going to keep it as if it would be a traditional I-10, even though the individual has a social, but it will not interfere with the loan.
Okay. But so you were mentioning that E10s usually have pretty stellar credit, versus, I mean, most people that I know that have a social don't have, the best of credit. Would that negatively affect the loan?
It depends on how negative the credit is. Now, we do obviously go based off the middle. Well, actually, we only use one bureau. So it's TransUnion. So whoever has the lowest TransUnion, then we go based off then. So if the Social Security person has a lower FICO score, so that's still kind of in place. It would be a convention or FHA. We kind of go based off that. So if the Social Security borrower has lower FICO score, then yes, it will interfere with that.
Okay. Thank you.
You're welcome.
I had one last question, and just from the Mortgage 101 perspective, what is the difference between a mortgage broker, a traditional broker, a traditional lender, to the big, large banks out there? I mean, overall, how, if a client were to ask me that and I refer them to you, what I think you meant, you spoke a little bit about being a mortgage broker, but can you dive into that just a tad bit?
Of course, I feel it's going to be more of the customer level that you'll have with your borrowers. You go to a bank, you'll probably have that loan officer take the application, and from there, it kind of goes into like a different department. There's multiple people that will touch your file in the banking world. Majority of the banking world, everything's done over the phone or online. You won't have that personalized one-on-one with a mortgage, one-on-one with that actual loan officer at that bank. And versus the mortgage side, you have more of that customer service, but here's the thing, it's the back end, it's the operation and how it works. A mortgage will actually, there's different protocols to go about. So, and I've worked in the mortgage side, and I've operated and managed in the mortgage side, and works with every mortgage company. They initially to obtain it's the actual process itself. So it's the time frame that it takes for an actual underwriter to review your file. That's the downside to it. From when they actually order the appraisal, it can take longer. The more mortgage broker side, again, customer service is there, but it's the fast or the quickness of the actual file moving into underwriting. That's the actual process itself. In the mortgage broker world, the file, we kind of have more control. We kind of work backwards, meaning we actually have to gather up all this documentation ahead of time and submit a complete file initially to underwriting, versus the mortgage world where it has to go into a processor, and the processor will call you out for all the items that we need, and then they'll submit it, versus we submit with we already know ahead of time what the underwriter is going to look for, the main items. A lot of in the mortgage side, they kind of submit with the basic items that they have, versus us, we'll know what we'll need. In the mortgage broker world, you kind of have to have more experience to be in the mortgage broker world, kind of have to have that you're working more independent in the broker world. So when we submit our files, the expectations of our conditions list is very minimal. It's probably just a verification of employment. We don't get called for check stubs, for bank statements, maybe earnest money clearing. So we already have all that documentation once the file goes into underwriting. So our conditions list is very minimal, very small versus the broker mortgage side. Will the underwriter, the loan officer will actually wait for them to request a list and tell me what I need to show you versus us will provide because we already know what we're gonna foresee. Because we are wholesale lending, our rates are a lot lower than the traditional mortgage. And we kind of compete with banks at this point. Rates are, everybody's rates are really high, but I feel with the mortgage side, rates are going to be a little bit higher. So our end, we're a lot lower. So that's kind of the difference. I feel like the answer to your question is the customer service and the back ops. You need to have a great support system on that end. So as a realtor, when you're out shopping, and I still advise, to have a bank, have a mortgage, and have a mortgage broker on hand, because more or less the overlays on a mortgage company we're not going to, mortgage broker are not going to have that overlay. And majority of the banks do have, they're more stricter. They have tons of overlays versus a mortgage and a mortgage broker. I've had deals where, a mortgage company can't close it, but we can. It's not because, we can do magic, but we don't have those overlays. So that's kind of the difference on that end.
Biggest thing I would just like to add is it's kind of like we're shopping for you. So because we work with multiple lenders, multiple different types of banks, we're able to get all your information, throw it in, and then look who has the best rate for what program we are going with for you right then. So you or the buyer doesn't have to call around to 3-4 different loan companies and say, hey, what's your rates, what your rates. We're able to see them all, and they are more competitive for wholesale. So that's the number one biggest perk for the buyer with going brokerage.
And to add on to that, because we are mortgage brokers and we have access to multiple lenders, again, with my end, I do come across other people with work permits. If you're not educated on work permits, everybody has a different category, depending on what country you came from, how you came in, what's your situation. There's literally a category from A to Z. So it's like 812 Bs. So depending on where you're at, I know Dreamer has its own category. There's different, if you're a refugee, if you're whatever it might be from your situation, a lot of banks won't take, even though you have a regular work permit, it's the category to take into consideration. Some lenders will take it, some lenders will not. So that's something to also take in mind when you are working with individuals with work permits. There is a list on online that an individual will, you just look up the work permit and they'll shoot you out the full list of the categories. And with that, and you'll see what their status is. A lot of people from different countries. I had an individual from Cuba. His was, they granted him a work permit, but the category was Cuban deportation, which doesn't make sense, right? Because Cuba is kind of part of where the nation. So that's something that we were having a huge situation with it, but we got it approved. But it could cause some ruckus with underwriting because they do take into consideration the categories of work permits.
And I had one last question. In the event I have a buyer who's already pre-qualified and which is kind of cool sometimes because that's kind of already done. However, sometimes you come across scenarios where that's not the best loan, that's not the best rate. They just got into the situation that they're in. If I were to, let's just say, send them to you, how does that affect them? Do you rerun their credit? Is it a good idea? Is it best just to stay where you're at? What does that look like with you?
So it would start all over on our end. We do have to run our own credit. Now, if it's beneficial for the borrower to do it within the same month because there's not a hit to the rate because, running it with the same month, with a hit to the credit, running it with the same month, it's not going to, versus you running it once a month, there is going to be a hit to the credit. But we do have to rerun a full application, turn in the same documentation as if they did the original step. But I feel that sometimes there's, other lenders that kind of foresee things, or lenders that won't take that extra step to help out the borrower. A lot of, lenders that are huge teams that you think that you're going to be working with this individual. They're one of the biggest working lenders out there, but you're going to work with somebody underneath. But sometimes a lot of realtors where I've seen that, they might be the best, but I won't be able to give them that customer. They won't be able to work with them one-on-one. So that's sometimes where you see that end. But I've had, buyers, individuals, or come to me that already had went to multiple lenders. And that's something that we can see, because when we pull credit, we'll see where they've been. We're like, well, what happened here? Why didn't that work out? So we kind of already know what mortgage company they were already at. But again, yes, the process starts all over.
Thanks.
Okay, perfect. Well, does anybody have any questions for us?
Can you just tell the audience, the agents, how they can get in touch with you guys?
Of course. Well, again, my name is Tamara, and you can contact me at 480-376-6983 or by email at tambestrate@outlook.com. I am available Monday through Sunday at this point, and I work nights. My Thursdays are my late appointments. I work, I take actually the latest appointment I do take is at 7:30. And at this point, I'm driving to the clients. If you guys have any questions, feel free to contact me. I am bilingual. I only speak Spanish.
And then I'm putting mine in the comments section as well, so you can copy all that, Tamara, if you wanted to add yours in there too. But yes, I'm Chantel. My phone number is 808-352-0692. My email is in the comments, the chat, Chantel@bestrate-homeloans.com. And I'm happy to do open houses with you guys. Please reach out, give me a text. I'm available weekends, nights, anytime. Give me a call. I am happy to help you guys in here for you and your buyers. And thank you so much for attending. If you've got any extra questions or wanted to, have touch bases on any other loan programs, we were kind of just doing the basics here, but USDA loans, interest rate, investment homes, ARM programs, anything like that, reach out. We're happy to give you guys some info, get you little pamphlets and all of that as well.
Yes, feel free to contact us with any individual questions. Now sometimes we get shy going on to these Zoom meetings, so let me know if you guys have any additional questions. You guys can also follow me on social media. My Instagram is Tammy Loans. That's Tammy with one M, and I like to post fun stuff. Also on TikTok, it's as well Tammy Loans, and then on Facebook you can reach me at Tamara Perez.
All right, I think that's all.
Perfect. Thank you, ladies. Well, you all enjoy your busy Wednesdays, and thanks again for hopping on today's Best Homes Wednesday workshop. You all enjoy your day.
Thank you, guys.
Thank you. Bye, everyone.